episode in our series of We Won't Back Down, which is the Atlanta Divorce Law Group doing whatever it can to support the small business community here in Atlanta and also at large. And I'm so excited to have my good friend and financial expert, Ted Jenkin, back on here. Ted was joined me actually 6 weeks ago at the very onset of the quarantine, and he gave some really good advice on how to stay financially resilient through this. And he made some predictions that actually I betted on, and it really worked out well for me. And I know a lot of other of you that listened really appreciated it. So I want to do a follow-up with Ted just to see 6 weeks after everything we had discussed, how he sees the market weathering the storm at this point with our 401k, our real estate, our financial investments, and also our businesses. You may remember that Ted is the owner and founder of Oxygen Financial, which is an incredible financial investment business, and he's a financial advisor, and he also has multiple other businesses of his own. At heart, he's really an entrepreneur. So I love sharing Ted's advice with our small business owner community because he has skin in the game. He is a business owner himself as well, and I'm so honored to have Ted join us since he's usually on CNN doing this, and he's doing this on our little Facebook Live show. So Ted, thank you so much for joining me.
Yeah, thanks so much for having me on tonight, Sarah. And just to get this started off the right way,
Yes.
wherever you want to do this, Sarah, on behalf of your firm, I want to donate $1,000 to frontline responders. We figure out where you want to put it and what you want to do. But I am so grateful that every day we have people out there trying to fight this coronavirus and keep people in our city safe and try to let everyone get back to a normal way of life. So we'll figure that out, but I wanted to do that to start this off.
I love it. Now I'll match you. I love it. Thank you for surprising me with that. I appreciate it. I didn't know you were going to do that.
Monday night. It's Monday night.
Yeah. So Ted, when we last spoke, the PPP had not passed. Now the stimulus plan was just talked about it. They hadn't passed it. Now they've passed it, and then they passed the second round of it. So much money has been thrown at us, whether small businesses, unemployment, disaster loans. And today the market went up, but I know better from always listening to you. You're my go-to guy that, don't get too high with the highs, don't get too low with the lows, just stay steady. Can you give us a debrief of where are we now and where do you think we're headed?
I mean, it's really fascinating because we basically went from a 50-year low of unemployment at 3.5%, and now we just hit an 80-year high of unemployment, hovering more than 15%. If you think about it, in the last 6 weeks, we've had 33 million people file a jobless claim. That means 33 million people are not working right now, which is a massive amount. And I suspect that on the trajectory we're going, although it's like the coronavirus, the curve is flattening, but it's not flattening fast enough. And we could easily get to 20% unemployment, which are numbers that we haven't seen since the Great Depression. So what's interesting about it is that in the last 6 weeks, every time we reported numbers on Thursday leading into Friday about the jobs report, unemployment was at 3 million plus people, and the markets actually went up. So it's a little bizarre thinking, hey, morale will improve as firings continue. But that's kind of what happened the last 5 or 6 weeks.
And that's the whole bipolar effect we feel, whether I'm watching CNN or if I'm watching Fox, I'm getting completely different stories. And that's why I come to you. How does this make sense? What's happening that unemployment's so high, yet the market keeps going up?
Well, I talked to you a little bit about this, but you have to consider that and I look at this in a number of ways, but so many millions of Americans right now literally just got a giant shot of Novocaine in their mouth, Sarah. And that shot of Novocaine was $600 of extra benefit on top of their state unemployment benefit. Now, mind you that the average unemployment benefit in America right now is $378. So when you add 600 to that, now you're at $978. Mm-hmm. If you had anybody that was employed for less than $978 a week, you're almost disincentivized to actually return to work. If you're making $600 playing video games and eating Doritos, why do you even want to return to work? Now, they're thinking about extending that until January, which I think is a major mistake. But part of it is that we just infused a huge shot of Novocaine in America, and that's making people feel like everything's going to be okay. And that's been reflected in the stock market, not on the actual valuations on how all the companies are doing.
And why? And obviously the election years this year. So you predicting that a lot of things will change after this election comes and goes.
Yeah, I think
when we're really going to get that shot of Novocaine wearing off, and we're going to feel the real brunt of all this.
I do think so. I think that, the markets will go up and down here in the short term. And certainly if you looked at the fundamentals, there'd be no reason why it wouldn't have a pullback and the market go right back down to where it was, considering how companies are performing. But if we continue to infuse money into this, which it looks like we will, you may not see a major pullback until the election, because we're just basically putting lipstick on a pig right now. That's what we're doing. Drawing a big old lipstick on the pig, and it's still a pig, but it's going to look this way for a while, probably through the election in November.
So at the last time you talked about this on 401k and retirement plans, that if you're in it for the long term, if you're younger and you're still working and don't have any thoughts of retiring in the next 5 years or so, you're good, stay the course. What if you don't have that kind of time?
Yeah, well, first of all, you're right. If you have 15 or 20 years, I wouldn't be worrying about the green or red arrows every single day. I would tell younger people that you should recognize that when they talk about the market now, you should be asking yourself this question: which stock market? Now, that sounds weird, but when I say which stock market, people see the Dow, they see the S&P, and they see the NASDAQ. And I'm going to tell you that over the next decade, that the dominant stock market out there will be the NASDAQ, because we are moving heavily into a technology-driven economy. And technology in all spaces, and we can talk about which areas, Sarah, will be the place to be. Now, if you've got to pay your kids' education in a year, or you got to put a down payment in 6 months on a house, you really should be keeping your money in short-term instruments like CDs, savings accounts, short-term bonds, because, I mean, look, the markets go, you saw what happened in March, fastest bear market in the history of the United States, 22 days. And then in April, it was the best year, a month in the S&P since 1931. So, talk about bipolar. It could easily go one way or the other, because the media is totally pushing around the market, not the fundamentals of the market.
So I think a lot of people would kick me if I didn't ask you to go deeper on where in the NASDAQ
so let's consider this, that the NASDAQ basically is positive now. So people are like, the markets are down. And I keep saying, which market? Europe, yes. S&P, yes. Dow, yes, more. Emerging markets, yes. NASDAQ, no. So let's consider what's likely to happen in technology. There's no question about it that more people, Sarah, will be moving home and working at home from good. Some of you may work at home 2 days a week or 3 days a week, which means we can't build our house on galvanized steel. We have to put big, wide piping. And so what you'll see across this country is a growth in 5G, in broadband. Obviously, we're seeing the growth in video conferencing. You're going to see things like telemedicine that was already going, that is absolutely going to escalate from a cost efficiency perspective and technology perspective. But in order to be able to do medical interviews like this, we need the speed to be fast. You don't want your doctor looking at a rash and all of a sudden it cuts in and out and says your connection is unstable. So think about all of the sectors of technology, cybersecurity for sure. Cybersecurity was big already, but if we have 20 million more people working at home, how are you going to protect yourself? So look for all of those areas. Technology, in my opinion, is going to be the darling of the next decade. And the true new blue chips aren't the blue chips that mom and dad used to know. And if you look at the Dow Jones, the true blue chips today are the ones that you probably hold in your portfolios, the Microsofts, the Amazons, the Apples, the Googles. These are companies that, they're your generation's blue chip. That's the way it's going to look, in my opinion.
What do you forecast will happen for the people that are in the short term and have their money in 401k? I understand you're saying play the more short-term game with CDs and whatnot, but if we had to make a prediction 12 months from now, 18 months from now, what do you think will happen to these 401k and retirement accounts? I
mean, if you do nothing with it and your allocation was largely stock, let's say you were 70% stock and 30% bond, I think there's a good chance that you'll be up. It's a good chance that we're going to recover Most bear markets will recover within 12 months. The part we don't know yet, and I think the part that will affect us the most, is how fast these 36 million people get back to work. It's hard to say yet how many small businesses will be out of business permanently. You and I know that most of the jobs are created on the backs of small business owners. So the truth in lending is that if a lot of these small businesses aren't open and they can't hire people, or they need less people because of social distancing, well, how are those other 10 or 15 million Americans going to get back to work? So so that I think that's going to be, if they can't get back to work, I think it'll be problematic, because you see the trickle down effect of less spending, more foreclosures, less people being able to pay rent, all that trickle down effect. Credit card defaults will be massive in 2021 if people don't get back to work.
The hardest part for our firm and the divorce firm is that we have so many clients that were like inches away from a settlement, from a divorce settlement.
Right.
And now everything that we had come to agreement upon prior to all of this happening, the 401k, division of assets, the 401k, the real estate, the business division, all of that equity, now that one party or the other is saying, hold up, this was based on evaluations prior to COVID-19. Now I want a new evaluation. Okay, but even the new evaluation is not really even telling us much, because of your point, we haven't really seen the true hit of the market. So parties are coming to these settlement agreements wanting to forecast, where do I think your 401k is going to be a year from now? Where do I think your business evaluation is really going to be, 6 months from now? And right now it's not worth much, but I think that if, I hold off on settling with you, 6 months from now, your business is going to be worth quite a bit. And so when you're speaking short term, you're talking about 2 quarters from now.
Yeah, well, I think this quarter, in the second quarter here, maybe the worst quarter ever in terms of negative GDP. The first quarter is about negative 4.8%. This will probably be close to negative 30%. Then the real question is, the pundits on TV, and I get to do TV, so I hear a lot of them that they'll say, hey, this is a quick, V-shaped recovery in the third and fourth quarter. We're going to climb back up. I'm here to just say that you can't turn the Queen Elizabeth in a bathtub. You can't just fire 36 million people and then tomorrow you have 36 million jobs. It doesn't work like that. So I think I see it more as a square root recovery. If you think about the shape of a square root, we went down like this, and it'll just be a slower climb to get back up. It's not like everything's going to be where we were in 12 months. That's a long climb to make. And those of you that have a business, imagine you had an off year and it just takes you like a full year just to get the steam back and going. Well, we got, millions of businesses like that. You just can't turn it on like a light switch.
Well, the 2008 crash of 2007, it's kind of end of 2007, I guess. Or was it? I don't remember at this point if it was end of 2007, 2008, but that took what, 10 years to recover from? Are we looking at that kind of a recovery period?
I don't think it's going to be that bad. And it was a nice recovery, but it took a couple of years to really get that steam going when it happened in 2008. And remember that 2008 was a true financial crisis. We were writing zero doc loans at that point. It's like, you don't have an income and you want a $500,000 house? Here you go. We're not doing that today. I think the banks are still being reasonably good in how they're loaning out money. We ran into an awful, horrific virus here that created this short-term crisis. So, the government's hope, I think, is by printing all this money and putting it in people's hands, it will stem that blow and things will get back to normal quicker. But I still think it's going to take time.
And it's also the amount of time it takes seems to be industry specific too.
Sure. If you're in the restaurant business, that's a rough road to hoe. If you're in the automotive business, I think it's a rough road to hoe. Look, is anybody on here tonight really know when you're going to go back to flying every week on an airplane when you were? So hospitality, leisure, travel, and retail, you're seeing they're going to close stores. It's how many of you really want to walk through a big mall again? So, those are, especially if there's a resurgence of the coronavirus in the fall. I'm not a medical expert. If you see 100 of them, I feel like they're all over the place. But I don't know. I mean, if it rears its ugly head in the fall, it will take longer.
What do you think about real estate investments? And let's talk about residential first, because I'll just tell you, where you and I live, we live in Alpharetta, Milton area, and outside of Atlanta, and it's still very much a seller's market. Is that part of the Novocaine, or is that really because real estate continues to stay strong?
Well, the difference, Sarah, between now and 2008 is that we were at almost 15-month backlog of inventory back in 2008, and we're only at about 4.5 months of inventory now. And so, if you look at the hot markets, inventory is still really tight. And the fact that mortgage rates are still extremely low, and I suspect that they will stay low for a good period of time, that still provides somebody to put down not that much cash, being able to take a mortgage that isn't that crazy. And I think in that $250,000 to $600,000, maybe $700,000 space, it's still going to be ripe. On the commercial side, I would not want to be owning like an office building that has like 7 floors. I think a lot of those companies, when their leases are up, they're going to shrink their space, and I think that's going to be a difficult kind of real estate to own.
So, and you expect interest rates to continue to stay pretty decent?
Yeah, I think it's almost math that says that they will. The Feds have cut the rates obviously down to almost nothing again. So you're seeing 15-year mortgages in the 2s and the 30 years in the 3s. But what a lot of people don't realize is that one of the biggest line items on our federal deficit is the interest we pay on the debt. And if mortgage rates went back to 8, 9, or 10%, we would suffocate ourselves with so much debt, it would be disgusting. So I don't see any math reason why rates will go up, nor do I see inflation going up. I hear people talk about hyperinflation. It's been 20 years now that the average inflation rate's been below 3%. 20 years.
Wow.
Right? So a lot of people are like, inflation is going to be 8% again. Really? Why? I don't see that. And remember, whether you like it or not, hopefully you do. The dollar is still the strongest currency going on out there. If you ever get to travel and you go to a place like Argentina now, you could eat the nicest steak dinner and the nicest bottle of wine for about $10. So you have to look at the perspective too, Sarah, of like, our country may look like it's hurting, but what do you think is happening in Italy, in Spain, that didn't have near the economy that
right? So let's talk about that for a second, because the euro's been our biggest contender, and now those European Union countries they're completely devastated. I don't know about Germany's positioning, because that's obviously a big one that impacts the euro, but this might actually be a chance for the dollar to outshine the euro.
I think it could get close. I mean, look, Britain just came out, the UK just came out and said they're going to be in their deepest recession in 300 years. Spain, when you look at furloughed and unemployed workers, 1/3 of the entire country is dependent on the state right now. And even Canada lost 2 million jobs last month. So it's not like other countries, we just don't hear about it as much as we used to, I think, on TV. And if you consider countries like Italy as an example, which I love Italy, by the way. I mean, I love it. They don't have the kind of economy we do, and they depend on tourism in a big way. You take countries like Greece, 90% of their economy is tourism.
Yeah.
Well, what's going to happen there? And they were already a country that at one time you couldn't get $20 out of an ATM machine. So, it's a great time, by the way, to buy those goods. If you ever wanted to get an Italian watch or handbags, or I'm not suggesting that you get out the credit card.
Yeah.
But if you were gonna do it or buy some gift,
this is the time to do it.
I think not a bad time to do it. Yeah.
Ted, a lot of your main clientele are business owners. That's Oxygen Financial's main clientele, and Atlanta Divorce Law Group, we represent a lot of business owners as well. What message can you give to both of our clients that are business owners of what they should be looking out for right now? If they had to leave this with something from you, what would that be?
I mean, it depends on what cash position your business was in, and it depends on your appetite for risk. But I will say that I think I always love being an entrepreneur, but I think if you're in attack mode right now, it's a great time to be an entrepreneur. Like, and you have to swivel your head that way. Cash is extremely cheap. You know, even if you took an SBA loan without the PPP, you get up to $2 million at 3.75%, you know, which is ridiculously cheap money, 200,000 of that money being non-collateralized if you just wanted to take a $200,000 loan. So is it time for you to acquire a competitor or to make that merger that you were going to make? Talent, 30 something million people are unemployed, and many people are saying, maybe I don't need the job that I have right now. Talk about heads that are swiveling. You can probably get the best talent right now, or at least compete for it, where 3 months ago, that talent might not have even been around. I think you'd be able to, especially in the administrative levels too, there's a lot of people looking for jobs. I think there's gonna be a great opportunity for that. And so, and by the way, marketing is cheap. You know, I'm not in the legal business and I've never been much of a billboard guy, but I have personal injury attorney clients right now that are buying billboards, penny on the dollars right now.
Yeah.
But some people that had them couldn't do it. So if you have the guts and courage to spend the money on marketing, I think, and I'm doing this now, you're going to be highly rewarded 12 to 24 months out.
I think for those of us who are in business, because we enjoy businesses, it can be an actually really fun time to pivot and find some really interesting things to do. And like you said, the government's giving us all the incentive to go out and create. I
think so. I mean, when you get money this cheap, this much of it, and you know, banks too. I mean, you know, I think it's a fairly good time, you know, and you may worry and say people are nervous. They're nervous about certain things they're spending money on. But, you know, at the same token, depending upon the kind of service business you're in, if you're in that business, a lot of people think about making a change now or looking at a second option. And so you can get in the driver's seat if you get your name out there.
Ted, thank you so much. I mean, your advice is so valuable and I follow it personally, and my husband and I treasure it. If anybody wants to find Ted or his team of Oxygen Financial, it's oxygenfinancial.net, correct?
You could do either way, oxygenfinancial.com, oxygenfinancial.net. We got a little quiz when you go on the website. We have tons of free ebooks. And anybody who's on here tonight that hits the website, I wrote a book called The 21-Day Budget Cleanse, which would be great for your business or for you personally. I'm happy to give you a free copy of the book just hit the website and I'll get it out to you.
And I'll send a link on it on the comments of this for anybody that is interested in it. I have a copy of the book. I think it's fantastic. And I think treating your household as a budget, actual profit loss budget, which Ted is a big proponent of, and that's what he teaches his clients to do, is a genius way to go. So really final thoughts for those of us who can deal with this from a long-term standpoint. This will come and go, and we just have to find the short-term opportunities in here and leverage them. And if you don't have that kind of time, you probably need to seek a financial advisor to come up with some short-term strategies to overcome this, specifically with the financial investments.
Yeah, definitely. And if you're a business owner and you're struggling, just look through your P&L, shop every vendor right now. Look, everyone's feeling a little bit of a nibble or a bite from this. And if you have a company that's giving you services and they really value your business, they'll give you a break or a discount while you're working through getting the wind underneath you again.
Yep. All right. Well, Ted, again, thank you so much for joining me this late, and have a wonderful night. And we'll see the rest of you on next Monday.
Thanks.